The stock market has created millionaires, built retirement accounts, and helped ordinary people grow wealth for decades. Yet millions of people avoid it because it seems confusing. Stocks, shares, indexes, bull markets, bear markets. It can sound overwhelming, but here's the truth. The stock market is much simpler than most people think. Today, we're breaking down stock market for beginners and explaining everything you need to know to start understanding how the market works. Let's get started. At its core, the stock market is a place where people buy and sell ownership in companies. That's it. When a company sells shares, investors can purchase them. Those shares represent partial ownership in the business. If the company grows and becomes more valuable, the shares may increase in value. If the company struggles, the shares may decrease in value. The stock market connects businesses seeking capital with investors seeking growth. Understanding this concept is the foundation of stock market for beginners. Because before investing, it's important to understand what you're actually buying. Let's simplify it even further. Imagine a company is a giant pizza. The company cuts that pizza into millions of slices. Each slice represents a share. When you buy a share, you're purchasing a tiny piece of that company. You're not lending money, you're becoming a partial owner. As an owner, your investment may rise or fall depending on the company's performance and investor demand. That's why many investors focus on businesses they understand. Because behind every stock is a real company. One question every beginner asks is, why do stock prices change? The answer is supply and demand. When more people want to buy a stock than sell it, prices tend to rise. When more people want to sell than buy, prices tend to fall. Many factors influence this. Company earnings, economic conditions, industry trends, investor expectations, news events. But in the short term, stock prices can move for many reasons. That's why long-term investors often focus more on business performance than daily price movements. One of the most important concepts in stock market for beginners is understanding index funds. An index fund is a collection of many companies bundled into a single investment. B-roll, diversified basket animation. Instead of choosing one stock, investors gain exposure to many businesses at once. This creates diversification. Diversification helps reduce the impact of any single company performing poorly. That's one reason index funds have become extremely popular among long-term investors. Simple, diversified, and easy to understand. Many new investors make decisions based on emotion. When prices rise, they get excited. When prices fall, they panic. Successful investing usually requires the opposite approach. Patience, discipline, and consistency. Another common mistake is chasing hot trends. By the time everyone is talking about an investment, much of the excitement may already be reflected in the price. The best investors often focus on long-term goals instead of short-term headlines. That's one of the most valuable lessons in stock market for beginners. If you're enjoying this breakdown, hit the like button and subscribe. We post weekly videos covering investing, personal finance, passive income, and wealth-building strategies explained in simple language. Now let's talk about how beginners can actually get started. Getting started is easier than most people expect. First, learn the basics. Second, open a brokerage account. Third, determine how much money you can invest consistently. You don't need a huge amount of money. Many investors start with small contributions. What matters most is consistency. Investing regularly allows time and compounding to work in your favor. Trying to perfectly predict the market is difficult. Building a habit of investing is often far more important. The stock market can be unpredictable in the short term. Prices move daily, sometimes dramatically. But many successful investors focus on years instead of days. They understand that businesses grow over time, economies evolve, innovation continues, and long-term investing often rewards patience. Among all the lessons in stock market for beginners, this may be the most important. The market isn't a get-rich-quick system. It's a long-term wealth-building tool. The people who understand that often have the best chance of success. So let's recap. The stock market allows investors to buy ownership in businesses. Stock prices move because of supply and demand. Index funds provide diversification. Emotions can hurt investment decisions. Consistency matters, and long-term thinking is essential. That's why stock market for beginners isn't about learning complicated formulas. It's about understanding simple principles and applying them consistently. And in the next video, we'll explain the difference between growth stocks, value stocks, and dividend stocks, and which type may fit different investing goals. You won't want to miss it.